A lot of you guys know me from the Palantir community as a Palantir OG. So a lot of you hold Palantir shares. I thought it would be great for me to show you what I would do if I currently held Palantir stock and I wanted to generate monthly passive income on the shares that I already own. So this is going to be a safe covered call strategy for Palantir. By safe, do your own due diligence. I'm not a financial advisor. And for sure, do your own research. This is going to be a video showing you if I did not want my shares of Palantir to be called away or assigned, and I just wanted to do a cash grab of some extra monthly income on my Palantir shares. Currently, Palantir is trading at $125.45. Ideally, you don't want to sell covered calls on red days. You would prefer to sell it on green days, but I'm going to show it to you anyways. Whatever I'm going to show you right now, if you were to do this tomorrow and Palantir would turn green, just plug and play the numbers and you would actually get more money than if you were to sell a covered call today. And before we go any further, I just want to explain what a covered call is. A covered call is simply an option is 100 shares, and a covered call is you are covering a call saying that you are willing to sell your shares at a certain price called the strike price at a certain date called the expiration date, no matter what. So if you're saying I'm willing to sell Palantir at $150 at the expiration date and Palantir is trading at $151, you still have to sell it for $150. If Palantir is trading at $200, you still have to sell it at $150. But if Palantir is trading at anything under the strike, $149.99, you don't have to do anything and you keep the premium or passive income that I'm going to show you in just a moment all the same. The first thing you're going to do, similar to cash secured puts on covered call, is you're going to do year to date and you want to go back an arbitrary number. It could be 3 months, it could be 6 months, it could be a year. I like a 6-month range or so, so I'm going to do year to date. And you want to see the peaks. You want to see what was the highest that Palantir hit. Remember, Palantir, whether you guys are going to want to hear this, whether you believe me or not, by all metrics possible, is currently overvalued. You are currently paying for Palantir at these prices 5 years in the future, what Palantir is supposed to be 5 years from now. All associated growth of Palantir, everything being equal of today, you are paying today's prices what should be 5 years from now. It doesn't mean you should sell your Palantir. It doesn't mean you shouldn't be buying Palantir. I'm just telling you what it is. You could believe me. You don't have to believe me. But there is nobody that can justify the current price of Palantir except for the retail community and the momentum of Palantir. With that said, I love Palantir. It's a rock star company with a rock star CEO and a rock star community. You guys absolutely rock. So you want to see the highest price, and these are all-time highs. So you had a huge peak right here of $125 on February 18th, and you have a recent peak, which is literally right now, of $130.18. And as you can see, year to date, it's currently up 65%. For Palantir, just for context, it's currently up 475% over the last year, which is absolutely astronomical. It literally went from $20 all the way up to today's $125, $130. So you got to ask yourself, how much more can Palantir go? And this is not a knock on Palantir. It's for you to understand what strike prices you want to sell. The next thing I'm going to do is, now that I know the peaks, which is literally these numbers, I want to go to this is a website called TradingView. I'm going to have a link to it in my comments down below. I don't care if you use my link. I think I make like $15. It's totally free unless you want to upgrade. And there's a couple of technical analysis here. Right here on the left-hand screen, right here, there's going to be something called a VRVP. And this is the volume right here. This is what you want on your trading view. These are your technical, they're called indicators. To add an indicator, there's going to be a little thing that says indicator. And you're going to click this little drop-down menu, and you're going to put these in. And the second thing that you're going to do is you're going to put BB, which is Bollinger Bands, which is this blue line here and this blue line here. And then you're going to do SMAs, which is simple moving averages, which is these lines right here. 20-day is a yellow line. The green line is a 50-day. The white line is the 100-day. The red line is a 200-day. And all these things are between the volume, between the moving averages, between the Bollinger Bands is supports and resistance, or ceilings and floors. That's all it is at the end of the day. The Bollinger Bands is something called two standard deviations, which just means the possible price movements between these two blue lines represent a 95% change in price, one way or the other. So right now you see automatically Palantir is on the upper ends of the Bollinger Bands. The volume you can't really look at because there is no volume, which means we're at technically price discovery, which means Palantir can run as much as it possibly can. And there is no resistance to the upside because all of the moving averages is below the current price because, well, Palantir right now did a moonshot. So the only upper bound you have is this $139. So keep it in your mind. $139 is the top of the Bollinger Bands. The next thing I'm going to look at, because it matters in this specific technicals, because like I said, since we have price discoveries, you need something else to go on. This is called an RSI, or Relative Strength Index. By the way, Bollinger Bands is automatically set to 20 days. I set my Bollinger Bands to 30 days, just to let you guys know. So if you guys are going to be doing the technical analysis. The next thing you're going to look at is the RSI. RSI is a Relative Strength Index. You have a number above 70, which means overbought, and you have a number below 30, which is oversold. Palantir is currently at the upper end, not currently overbought, so it could still keep going up, but it doesn't have much more steam to go. This is what this is currently telling me. Also, a very important indicator is this right here. You see this point? You see there's a purple line. So the purple line is the actual RSI, the strength index of the price movement. And the yellow line is something that allows it to smooth down. And it's a 14-day simple moving average. So essentially, this smooths it out. And this is the price movement right here. And when this purple line, the RSI, crosses down, it crosses down to the simple moving average or the yellow line. Just remember, purple line crosses the yellow line downwards, it is bearish. And if the purple line crosses upwards through the yellow line, it is bullish. In and of itself, just by itself, doesn't mean much. But this plus other technicals and a bunch of other things all come together to give you a better picture of the options that you're selling. So this is telling me that Palantir is doing very, very well. And it doesn't mean that it's bearish. It just means that it might just be calming down. And you, as a covered call seller, don't care if Palantir is going to keep going up because you want it to keep going up. You got asset appreciation. You just don't want it to go beyond your strike price. So you're trying to predict the future. And selling covered calls on something that ran up 475% over the last year is at the top of the Bollinger Bands, near oversold. And then you have this divergence in a bullish trend. Kind of starts making sense. Besides for this, I'm going to look at one more thing. This is a statosodic isolator. I still can't pronounce this. And this is similar to the RSI, except it's a little different. So over here, anything above 80 is overbought, and anything below 20 is oversold. This, as you can see, is above 80 right now. It's currently at 79.24 and 70.1. So it's really near or at overbought. And as you can see right now, the main line right here, the green line, is actually crossing the orange line, which again, the green line is the actual price movement, and the orange line is a simple moving average of the last 14 days, if I'm not mistaken. This is also showing you right now that there is a bearish divergence in a bullish trend. So what does all these things mean? This means that Palantir is a great company. Palantir is going up, but it might be calming down a little bit, which is the best possible thing for you because you don't want the price to drop. You want the price to stay near or around the current price, and you want to collect passive income. That's the name of the game. You don't want to sell your shares. You want to keep your shares, but you also want to collect income and use that for whatever you want, whether it's buying more shares, buying a different stock, buying options, giving yourself some downward protection. So now you're like, okay, Palantir is near all-time highs, practically all-time highs. It's up almost 500% in the last year, 70% for year to date. It just had earnings, so you don't have to worry about earnings coming up. There's a 90-day pause on the China negotiations and tariffs, and they don't end until July. So you're kind of safe between now and June. And then This is the Fair and Greed Index. A month ago, we were at extreme fair. Right now, we are at greed, and we are almost at extreme greed, right? So 75 would be extreme greed. We are currently at greed. So everything that I'm showing you right now is that the market can still keep going, but it's not going to be a crazy bull run, crazy rip, because the last month was amazing for the stock market, right? Literally the last month, everything took off. So right now, it's not a bad situation to sell a covered call on a lot of stocks. But specifically, let's talk about Palantir. Now that you know all of these things, how do you actually sell the covered call? And let's pick a strike. So the first thing I'm going to do is press trade options. I'm always going to go 4 weeks out. But before I do that, instead of buy, I want you to press sell and leave it as calls. You're selling a covered call 4 weeks out. So this is going to be 1 week. May 30th is going to be 2 weeks. June 6th is going to be 3 weeks. And June 13th is going to be 4 weeks. You want to look at what's the best possible price here. Remember I told you that this is a very strong level right here, 139. And if you're going to go over here, you're going to go to 139. This is almost identical to the play in general you would want to do. So why would you look at this? Is because you want to be in general 80% in your favor. And if you click on this, you're going to see a Greek is 0.28. This is a little aggressive. I want to go weaker. But this is not what I'm going to be selling if it was me and I didn't want to lose my shares. Just to give you an example, you would probably be selling right here. This is what you want. If you want it to be a little bit more not cautious and you just want to collect more premium, this would be your play right here, the 145, which I think would be very safe. But this is not the one that I would choose. I would not choose this one, but this is, for all intents and purposes, the rule of thumb one that you would pick. But because I want to be super, super cautious, I don't want to give myself a possible anything to get called, I would probably be selling right around here, 155 or 160. I would do the 155 or 160. If you click on the 155, this is a 0.11 delta. If you click on the 160, this is a 0.08 delta. This is probably the best safe play, bang for your buck that you can possibly do, and you would collect 78 cents per share. Now, I'm going to assume that most people that have Palantir watching the show have at least 1,000 shares of Palantir. I'm going to assume that. I think most of you guys have more. And I'm also going to assume that most of you guys are high single digits or low double digits, so somewhere between the $8 mark and let's say the $20 mark. So that means you guys are crazy in profit and you guys just want to generate extra income. Well, if you click on this one, they're going to give you 78 cents. The very first thing I want you guys to see is instead of taking 78, because they're always going to give you the smaller number, remember, there's going to be a bid and there's going to be an ask. 78 cents to 82 cents. So at the very least, I want you to put in 80 cents. You could probably get 81 cents and it adds up, but let's do 80 cents. So for every 100 shares of Palantir that you own, this would pay you $80. Most of you guys have 1,000 shares of Palantir. So for most of the people watching this channel, a very safe 94% in your favorite play to sell covered calls on Palantir would get you $800 in 4 weeks to put up every 1,000 shares. 10 contracts times 100 shares would give you 1,000 total shares, or 10 contracts at $80 a contract, you would collect $800. Now, you guys might say, well, Adam, that's great, but how much percentage is that? Now that you know your strike price and now you know how much you're going to be getting for this contract, let's calculate the percentage. The percentage that how you're going to figure it out. The actual percent that you would be collecting is, you would take 100, you would divide it by whatever it cost you to buy the Palantir shares. So let's say your average on Palantir is $50. You take 100 divided by 50, and then you times it by 0.80. This would give you 1.6% on your money if your average is $50. Well, if you're a real OG and you divide 100 divided by 20, and then you times it by 0.80, this would give you 4% on your original money because the amount you're collecting today is not on today's price. It's for the price that you paid when you initially initiated and bought Palantir. It's your average. And if you're calculating based on your average, the percentage you're collecting is absolutely massive. Now, if you happen to be buying Palantir today, you take 100 divided by 125, which is the current price of Palantir, and then you would times it by 0.80, you will currently be collecting 0.64%, which is definitely less than the 2% that you would want every single month. But if you times this by 13, remember, you're doing it every 4 weeks, not every month. So there's actually 13 4 weeks in a year, not like there's 12 months. A month is 4.3 weeks, not 4 weeks. So you're doing this every 4 weeks. So if you times this by doing this 13 times, you would collect 8.3% on your current stack of Palantir in today's current scenario that you're paying for Palantir at the current price of $125. But if you're an OG and let's say your average on Palantir is, let's say, $25, whatever. If you times this by 0.8, you're collecting 3.2% on your original money right now. And if you times this by 13, you are making 41.6% in the year on your original cost basis for Palantir. That's why I want to be super risk off and be at such a small delta, because I don't want to actually sell my shares of Palantir. All right. Well, now you're going to say, well, Adam, what's my next step? By the way, this bid and this ask changes. So now you're not going to be getting 0.8. Now you would be getting roughly 0.78. But this changes while I'm doing the video. So we can always, play with the numbers. But let's just call it 0.8, right? So how do you actually do this? All you would have to do is press review order. Now, I don't have enough shares, so it says for me, go to edit. But if this was you, all you had to do is press submit and you would get paid. The money or premium that you would collect is yours to keep no matter what happens. If Palantir is less than $160 by June 13th, nothing happens and this expires, absolutely worthless. You keep your premium all the same. If the price of Palantir is above 160, you have to sell your shares for 160. However, what I do is I sell these options 4 weeks out and I set it and forget it. And I will not manage this until the last week. So if these are being sold for June 13th expiration, which is a Friday, the Monday of that week, which will probably be June 8th, I'm assuming June 9th, is when I start managing it, Monday and Tuesday of that last week. And if Palantir is nowhere near 160, like below, don't do nothing. There's nothing for you to do. You're chilling. If Palantir is near 160, by near I mean 155, 160, 165, then there is some management to do, which I'll make a video on that a little bit later when the time comes. I hope this explains the theory, the logic behind selling covered calls, specifically when you don't want to be called on a play. If you don't want to be called, this is probably a safe bet. You can go even higher and collect, less premium, but it's even safer. Like there's even premium where you could sell it at $200. So let me just show you really fast. Instead of this one, you could literally sell a $195 or $190 strike. Sure, it doesn't seem like a lot, but this is easy money. Let's say you have 1,000 shares of Palantir. You do 10 contracts. That's $150 you would collect at a $190 strike, which is obscene. It's absolutely crazy. This is not going to be happening most likely. And you can see right here, you have a 99% chance that this is not going to happen. It might seem like small change for you, but if you have this in a retirement account, there's no taxes on that money. You just keep accumulating more wealth. And worst case scenario, even if your shares get assigned, there's no taxes on it. There's not a tax event. If you have it in your regular brokerage, you have to be a lot more cautious because if you bought it at $20, you don't want to sell it to pay taxes, or maybe you do. Maybe you want an exit strategy. So you might want to even go up on your strike prices, even above 160. Maybe you want 165 or 170 because your cost basis is so low it's free money, essentially. Don't be greedy. Do your own research. Don't blame anybody but yourself. If this doesn't work out, I'm just giving you my own personal thoughts and my own personal how I would sell covered calls on Palantir if I did not want them to be called away. And if you're more neutral, just go with the 20 Delta. I think the strike price was like 140 or something like that, if I'm not mistaken. And that's kind of more neutral of you want to collect premium, you want to collect money. And that was paying like $3 a share, which brings you up over that 2% in monthly income. Guys, let me know if you have any questions. I'll be happy to elaborate. Please hit me up with the comments down below. And if you missed it, hit on this video right here for more information about selling all types of options. I'll see you guys in the next one. God bless you and your family.